Chevron and Exxon reporting earnings, and I think a little bit of a disappointment for some investors who are also, of course, focused on those two big deals that each one of those companies are pursuing. Exxon CEO Darren Woods sat down with Bloomberg TV a little bit earlier to talk about the state of the sector.
The industry is still recovering from the impact of the pandemic and the lower levels of capital that have been going in across the industry to offset the depletion that's been happening. And so supplies are fairly tight.
And that was Darren Woods speaking earlier here on Bloomberg Television. Neal Dingmann joining us right now. He's Truist Securities Analyst, and he has a buy rating on Exxon and a hold on Chevron. And I do want to start off with Exxon here. I mean, they did have a miss in the most recent results, Neal, but it wasn't a huge miss. And obviously a lot more attention is being put on the big acquisition that they have to close and at some point digest. What you heard on the conference call, what you heard in the earnings release, and what you heard in that interview, did it give you confidence that they're actually going to execute on that?
Good afternoon, Romaine. Simple answer is yes. It does give me confidence. You're right. The quarter itself was a little sloppy. I had much more concern on what I heard about Chevron's quarter, frankly, because of Tengiz and some delays there when I look at the two stocks. But again, Exxon, you look, earnings missed, CapEx was a little bit hot. There were just things that I think are a little transcendental that, again, I don't worry about to start 24. I think that acquisition of Pioneer, especially being an all-stock deal, I don't look at it being immediately accretive, but I think it's going to ultimately be one of the best acquisitions we've seen in many years.
Well, the market reaction today is a little bit more severe for Chevron, and some of that has to do not only with the results, but also the idea that what it's paying or has agreed to pay for Hess, some people think that that might actually be a little bit too rich, at least relative to what Exxon's paying for a Pioneer.
That's right. I mean, they definitely paid, and you think about it, they're actually buying, when you buy Hess, you're buying essentially what are you getting? Majority of that company is Guyana, which is operated by your major competitors. So it was a little bit odd. I mean, it does help them diversify, but I agree with you. I thought the price they paid was a relatively steep price, where I mentioned that I think Exxon might be a little bit dilutive for the next 3 or 4 quarters. I think Chevron could be dilutive for the next potentially 6 to 7, maybe even 8 quarters on this deal, again, depending how quickly Guyana ramps up because, unlike the Permian Basin over with Pioneer, with Exxon, that is a short cycle business, Guyana, great field that's just going to take longer to ramp up.
So that sounds like a bit of short-term pain for shareholders when it comes to digesting those big acquisitions. Nevertheless, we've seen ExxonMobil increase its dividend 1 cent more than what Bloomberg had expected. And Chevron is also, according to Mike Wirth, pledging to increase dividends and buybacks. Is that, from where you sit, the best use of their cash, the best way to keep shareholders on side?
It's a good question, Charlie. I think the simple answer is yes, because the balance sheet is very stellar. I mean, you don't want to, given how low their interest rates, you don't want to completely pay off your debt. And they're able to do a lot of these deals like this last one in equity. But what's interesting to me is they're paying out now the last 2-3 quarters, well over 100% of their free cash flow is being paid out to support the combined dividend and share buyback. So to me, that's just a little bit aggressive. Again, I'd rather see, like we see with a lot of the large independents who pay out 60, 70% of their free cash flow each quarter. I'm all for shareholder return. I just think, again, you obviously, even if you're somebody with a stellar balance sheet like a Chevron, you can't continue to pay out 150% on a continuous basis of your free cash flow.